What do you see as far as what investors need to do to manage their portfolio and their risk?
That's a good conversation. That's something that people, obviously over time, the stock market is the best place for your money. But people need to be aware of patterns of volatility. It goes from cycles of low volatility and climbing to high volatility, and drops can be very rapid. We've been through that. We're almost on the 20-year anniversary of the 9/11 attacks. And I was at the Truckee A.G. Edwards office that day, in the office, watching the plane go into the World Trade Center, and the stock market closed. And of course, a big drop after that. Events like that can happen and are totally unpredictable. Investors need to be in for the long term, know that it's a long-term investment and long-term strategy, and that there will be cycles of high volatility that are emotionally very uncomfortable.
They can be, for sure.
Mhm.
We went through the dot-com bubble and then the housing bubble of 2008. So what do you think about this current market, Ken? Are we running a worldwide debt crisis now that could turn into a big bubble?
Well, yeah, that's something, recessions are usually accompanied by bear markets, and we'll have a recession again at some point. I don't know when it's going to be, but this is one of the longest running bull markets in history. It's done very good for most people. So sure, it's not a bad idea to look at your personal situation and perhaps think, should I be more defensive or not? What's your age? What's your income, your net worth, your risk tolerance? And, be aware of that. And there are tools that can be used to lower risk. Diversification is one of the basic tools, but make sure you're not all loaded up in one stock or maybe one sector. Spread it out, some international exposure.